joining us for our cash tag segment, which we're focusing on Take-Two Interactive, a major video game developer, a company that, if you follow the logic here, Megan, it should be outperforming given more and more people playing video games as they maybe are spending more time at home away from, normal other recreational activities in their lives. And hey, they got to find something to fill the time. For better or worse, a lot are choosing video games. And then you look at the chart, Take-Two seems to be a winner.
Yeah, you're exactly right. We've watched during this quarantine and just during the last few months this huge influx of people who are talking about not only playing video games. I think just generic mentions of playing video games is up about 50% year over year, but new to gaming. So people who this is the first time that they've ever played and they're kind of entering this arena is up even more than that. So I think that this is really an expanded audience base, and we're seeing this strength reflected in Take-Two. Purchase intent mentions for the quarter that they're about to report were up about 72% year over year. That's pretty significant. You can see this is the current purchase intent demand mention. So these are mentions of consumers who are buying or playing video games, brands like Grand Theft Auto, Red Dead Redemption, NBA 2K, Borderlands. These games kind of sit underneath Take-Two's umbrella, and you can see that things have kind of settled in a bit. We're not pacing at the peak growth, that peak 72% that we saw from April to June, but there was definitely an influx, and we expect that this report is going to be really, really strong for Take-Two.
Megan, Take-Two is a gaming network that provides the games for PlayStation, Xbox 360, Xbox One, playing on your phone, playing on your computer, playing on your tablet. They've got two of the bigger games in Grand Theft Auto and Red Dead. Now, again, I make this statement a lot on the air here. I don't play video games, but I've purchased a couple thousand in my life as I've got 5 children. So the question is, though, from a trading perspective, right? I believe me, if they're not firing on all cylinders here, then there's something wrong. And their stock and the chart of the stock says that they are firing on all cylinders. But Megan, and here's the big question that you need to help us get to an answer to today. A lot of names that have run up during this period, and Microsoft being one of them that's in gaming, has sold off after earnings, after making big runs. Is this one of those names that could also, no matter what they come out with, sell off as well? Because even though the story on this company's right, we're traders and we're trying to make money off trading this name. How do you guys feel about how far it's run, and has it run too far too fast?
Yeah, that's a really valid point. It has performed extremely well over the past few months. I don't think that this is anything that the market is not aware of. I don't think that a strong report is a surprise. In fact, I think it's the expectation. I think revenue is expected to be 95% higher year over year. So this is a really high bar that Take-Two is going to have to meet. And one thing I think is interesting in our data is if you look at the quarterly bar chart, you can see the quarter that they're reporting is going to be extremely strong. We saw a really, really significant uptake from April to June. And then if you look at that far right bar, though, that 21 quarter 2, that's actually kind of settling in lower year over year than the prior year. So we see this huge uptick in mentions for what they're about to report, but now we're seeing some normalization. So I think that timing is at play. Obviously this is just the current pace. We're only about 1 month into this current quarter, but they have some new games that are slated to be released in September. So we'll definitely be watching that. But I think guidance could be key here to see, are people continuing to stay on and continuing to play and, continuing to spend.
Megan, when I think of video games, I think that, I can only play one at a time. You can't play 3 or 4 video games at the same time. Maybe a household can if there's several, people playing these different video games, but typically they probably only have one gaming machine where they can only play one at a time. And I look at these names and kind of the 3 big ones, Take-Two, of course, Activision Blizzard, and Electronic Arts or EA. And I look at their charts, they all look the same. They're all, up and to the right. But is this space more of a winner-take-all kind of a space than we give it credit for? Isn't there kind of a hot game of the year that everyone's playing? And if you have that game, you won that summer. And is one of these companies, is there a game this year? And, which company has it?
One that we really keyed on earlier, I think because it was a bit of a surprise release, was Call of Duty. And I believe that falls under the Activision umbrella. We're seeing significant strength in Activision. Obviously, gaming across the board is showing significant year-over-year growth, but I think Activision has the strongest growth out of the names that we're looking at. I think that was really propelled by Call of Duty. There's been a lot of, even like microtransaction mentions inside of Call of Duty. So people who are spending money, once they've already bought the game, they're buying these little things inside the game. So that recurrent revenue is important. I think upcoming for at least for Take-Two, this NBA 2K, the new release is going to be really significant. That's slated, I think September 4th is when it comes out, and they actually increased the price. So that's something that we'll be watching. They added $10 onto the price of the game. And so if consumers are willing to pay this, and if that shows growth year over year, I think that's really promising long term. But now, in the current quarter, at least, it's kind of a wait to see when that release is dropped, how consumers will respond.
That is very interesting because, Kevin, one thing that's been very stable in terms of pricing, not seeing any inflation, has been video games. And I'm sure you've noticed that over the years. As you said, you've purchased many. They've seemed like they've been $60 for 20 years. And so to hear that there might be some increases in pricing, maybe that starts a trend. But another thing that Megan hit on was this kind of, how these companies have adapted. They understand that, getting people into the game is one thing and getting them to buy the game is one thing. But if you can continue to monetize them while they're playing that game, 99 cents here, $1.40 here, that really adds up over time, especially if there's millions and millions of people playing these games. And it sounds like, obviously NBA 2K probably getting it a boost as the NBA is restarting as well. Maybe that could be a really good test for these video game stocks to see how, that price demand and everything around there really impacts it if they do successfully launch something with a $10 higher price point.
Yeah, there's an economic term, Alex, for what you talked about there, and that $60 range in terms of prices for video games, and that's elasticity of demand, right? And anything over that, sales probably dropped off, so they hit their sweet spot with the pricing. But now we are going through, and I know this because my child told me this, a kind of an evolution of gaming, whereas the gaming services are coming out free and you buy things other way. They're getting revenue from other sources other than just buying the $60 game. So there's a whole new evolution of the way these firms make money and the services that they used to charge for. A lot of them offer for free now, and they gain revenue other ways. So it's going to be interesting to see how this plays out over time. Because just like many industries, the overall prices, competition is bringing the prices down. Or in this case, there is an inability for prices to rise based on competition. So yeah, there's a lot going on in gaming right now. And, it's really interesting time. Obviously, Take-Two stock has run quite a ways over the last few months, and it should have, based on the actions of consumers and people that use their gaming services. So this is going to be an interesting one. The market maker move says that over a $12 move. So there's going to be some volatility in this earnings release, Alex.
Megan, kind of final thoughts here. Obviously, you talked about the macro trend. It seems like it's going the right way for these companies. You talked about excitement around future releases. We know things are transitioning towards new consoles. Do you guys look at this space as a whole and say we like it, or is the price getting a little expensive and it's getting harder to be bullish on these stocks?
I think that from an edge perspective, we definitely have less of an edge with our data now, just because the market seems to have caught up with this surging demand, right? It's no surprise that people are playing video games. This isn't brand new information, but I think it is important that, we are seeing this trend remain elevated in terms of more people are continuing to game. I think that that's positive from a long-term perspective. This model of recurrent revenue, I think, is really positive from a long-term perspective. So the ability for consumers to make these in-game purchases, after splurging for the initial game. But then also, something that we have to watch moving forward is this demand sustained? So for Take-Two, the quarter that they're about to report is undeniably very, very strong, but expectations are really high. Short term, we're starting to see this settle in a little bit. So we're really keying in on guidance to see, if they tip their hand and, if this kind of matches that there is a little bit of a pullback heading into these new game releases.